Hello, good morning, everyone. So let's have our daily briefing for today. And let's have a quick market recap on yesterday's data. Okay, so first things, we have the unemployment rate for UK for the month of October. So the previous data was 4.3%, and the market forecast at 4.2%. And the release time, it's 3 p.m. So yeah, the actual data was 4.2%, so did not beat the market forecast, but it's actually much better comparing to the previous one. So the difference was about 0.1%. And we also have the claimant count change for the month of November. So the previous data was negative 14.9K, and the market forecast at negative 20K. And the actual data, it's negative 49.8K. Followed by the employment change for the month of September. So the previous data was 247K, and the market forecast at 175K. And the actual data, it was 149K, so it's actually lower. Did not meet the market forecast and the previous data as well. But surprisingly, the employment data for UK, right after the release, it did not create any much volatility. But during the US session, right after the release of the PPI data, or the Producers Price Index, for the monthly basis for November, then a lot of financial instruments went down sharply. To be specific, the British pound against the dollar. So the previous data for the US PPI was 0.6%, and the market forecast at 0.5%. So the actual data, it was 0.8%. So it beats the market forecast in the previous data as well. So the PPI for November, it rose for about 0.3% and benefited the dollar index, but some financial products did not. So for today's economic data, during the European session, we have the inflation rate for UK monthly basis and yearly basis for the month of November. And for the US session, we have the retail sales monthly basis for the month of November. And for Canada, we have the inflation rate monthly basis and yearly basis as well for the month of November. And the next day, the most awaited Fed interest rate decision. So it will be released Thursday morning, 3 a.m. So the previous data, the previous interest rate was 0.25%. But however, a few weeks ago, the Feds, they've announced that they will start their rate hike. It's either by the end of this year or the first quarter next year. And also, they've announced that they will cut their debt purchases, which is good for the dollar. So later, if they uh, increase their interest rate, then it will definitely be a volatile market for some currencies. But if this one, it will be good for the dollar index. But for gold, euro dollar, and other currency, it will not. It's not a good sign for them. Then we can expect that there will be some decline for the day. So for this key product, we have gold. Okay, so the current price of gold as of the moment is around the 1769.47 per ounce. So obviously, the price of gold last night went down sharply as well due to the PPI data for US. So with this one, the market is expecting to be that the Fed will start to raise interest rates ahead of the schedule. So they are expecting that they will have the rate hike for tomorrow morning, which will set the tone for the price of gold trend for the next period of time. But in my own opinion, based on the technical point of view, the overall trend is still unfavorable for the bulls. So if they started to have a rate hike tomorrow morning for 3 a.m., then we can see a sharp decline for gold, and possibly if the price of gold went down sharply below the 1761 territory. So by the way, the 1761 per ounce, this one is actually the lowest price since December 2 for this month. So if the price went down below the 1761, then we can see the price of gold to go down our current support or second support around the 1752.81 per ounce. And if the market is really strong and the momentum is really strong for the dollar, then we can see a sharp decline more on gold below the 1752. And the psychological levels will be around the 1721. So the 1721 level, it's actually the lowest price since September this year. But on the alternative scenario, if the price of gold will continue to maintain the price around the 1761, then we can see or we can expect that it will be a sideways trend. So for those who are planning to sell this one, in my own opinion, it is recommended to wait for the release of the interest rate decision before we enter the market because we have to be cautious with this one. So for the support, the 1761 and 1752.81 per ounce, and the resistance 1784.66 and 1798.58 per ounce, respectively. So once again, US session, we have the retail sales and we have the inflation rate for Canada. And the next day, we have the interest rate decision for US 3 a.m., followed by the FOMC press conference at 3:30 in the morning. Thank you, everyone, for joining our daily briefing today. Stay safe and have a great day.